Good morning, it's Jonathan Barrett with this week's Market Buzz. Plenty to talk about. And in this week's Market Buzz, we're going to break it up into three areas. First of all, we're going to talk about what's happening with oil, what the US strategy is. Secondly, we're going to talk about the recent bout of US economic numbers. And thirdly, we're going to talk about the private sector credit. So there is quite a bit to cover off on this week because they're all pretty dynamic in terms of how they will affect the markets. So let's just have a quick deep dive into a couple of big points from last week. US-Israel versus Iran war. The US intends to invade Kharg Island to, what they say, secure global oil. 90% of Iran's oil comes through this particular island, which is just off Iran, and then obviously sails down to the Straits of Hamas. So very important. And if the US do that, there are certain implications which we'll expand on a little bit later. Equity markets remain weak. Last week the S&P was down 1.9%, Nasdaq was down 1.6%, and the Dow was down 2.11%, extending the week before losses. US industrial and manufacturing all weakened. Remember, this data is pre-war data, and that to me is a concern. Core PPI higher than expected at 3.9%, and the Fed interest rate announcement, no change to official interest rates at 3.75%. However, noting when we look at the private credit defaults area, that's starting to increase, and the rates there are looking around about 6%, but more on that a little bit later. Oil up, gold down, quite a massive move on gold, and we'll talk about that as part of our trading recommendation or trading look. RBA lift rates to 0.25% to 4.1%, and in China, housing prices down 3.2%, and the previous was also down 3.1%, and that's extending those big concerns that we have. Okay, so let's have a look. Let's go and have a look at what it means for the US and if they want to secure the Kharg Island. They say it's to protect global supply. Now, Iran's largest client is China, so it looks like there's some favours actually happening somewhere along the line there. Remember, China is a major importer of oil, as for that matter, so is the US. So it is a concern. It's a small island. Basically 90% of all oil exports from Iran go through this particular area. So it is a major import. The US did attack it on March the 13th, and they're considering more action. Now, I think the important thing here is that if they do that, then that's going to obviously increase or heighten the concerns in the area. I think more so where Iran's linked to the Houthi rebels in Yemen. And I think as a result of that, you could see more concerns, because if they control the important pass, which is in Yemen, and that basically is the pass which is called the Bab el-Mandeb Strait, and if they control that, that's another 10% of oil that's going to be cut off. And I think that to me is a major concern if the US go in here. So it's retaliatory from the US going in to invade that island, that their team or the people that Iran has been supporting, the Houthi rebels, if they do that, well, then that will further cause concern. More so on the insurance side, because you're going to be cutting off supplies through the Suez Canal at this time as well. So it is quite a concern, and in my mind, something to look at and look to monitor, because we're losing about 30% now, or 30% it will be if that goes, of the global oil prices. And as a result of that, we're seeing equity markets move. But I think more importantly, what does this do to economic data in the States? And I think this is very important to focus on, because we're seeing data in the States that hasn't actually had the last 3 weeks of increased oil and energy prices. And that to me is a big worry, because the data actually showed industrial production was down, inflation was steady, but PPI was actually moving higher. Now, that to me is a little bit of a concern. I think when you look at it, this is all predated invasion or predated war, and as a result of that, we've got a lot more worse numbers to start to filter through, and that in itself might actually cause a little bit more of a sell-off in those equities, which I firmly believe we're going to continue to see that. Now, I think the important thing here is that although we're seeing weak numbers already, see the weak numbers coming through with the cost of energy a lot higher. We've already got a bad scenario, but what that's doing is that's forcing yields also a little bit higher, okay? And as a result of that, you're seeing people start to move into it, but more importantly, the private sector credit. Now, that's an area where we've always kept it in the back of our minds that something might happen, because it is an area which, basically similar to Bear Stearns or long-term credit, issues, where we do have some major liquidity issues starting to come up to bear. That is an issue. Private credit is where the private investor invests money with the company. That company then goes and builds something or does something with it. Now, if interest rates and they can't perform on what money, they can't pay back the borrower, then there becomes an issue and there's a liquidity crisis. And there's a mismatch, and that sort of puts a little bit of a hole in the market. And that is a worry. Now, they have looked at a mechanism called payments in kind, and that's sort of putting other forms of payments that they're getting from other investments into this investment. So as a result of that, they're saying that might steady things off. But it is a major issue. And what we are seeing when we look at that liquidity, we're seeing some major companies which we do know about. We're seeing major companies like BlackRock, also Blackstone, Morgan Stanley. They're basically all holding back some of their redemptions, or basically waiting, just not being so aggressive in actually pushing out their redemptions to those people that actually want it. Morgan Stanley, Blackstone, Blue Owl, they're all facing these similar pressures. Blackstone actually came out and basically said, well, they can only withdraw up to 5% will be honoured. As a result of that, they had a run at about 9.3% of the fund. So there are major concerns in that area. So that to me is an issue. So when we look at it, we have obviously concerns in the Middle East, and that could easily escalate further. We have economic conditions in the state. We haven't seen the energy or the high cost of energy in those economies yet, and what that's doing to confidence. And thirdly, we've got a crisis developing in the private sector. Now, those three combined could be enough actually to tip these markets or tip the global market into a recession and a readjustment and a realignment in equity prices. So that's something we're going to keep a lot focused on. Okay, what's that we've seen this week? I guess if you look at it, everything that'll happen in the Gulf will be the Persian Gulf will be the ones that'll keep a little bit of power in terms of what the markets will do. But apart from that, we've got Michigan consumer confidence, we've got S&P PMI, a few other leading indicators coming out, global flash PMAs for the Eurozone, Japan, UK and India. That'll always give us a bit of a gauge as to what's happening there. So I think that's pretty important. So yeah, lots happening there. Keep an eye on it. Let's have a look at now some of the markets, and I'll just share my screen. Okay, first off the wrap, what have we got? We've got silver. Okay, a very large move in silver to the downside. We're not unusual this. We have seen it before. It's not unusual. But I think one thing to notice here on the daily chart is we're getting to a low, slowly getting to a low. The good support around this level, around that 63.50 level. We've come down consistently for the last couple of days. Momentum here is on its low, so we just need a positive close, and then that'll swing this market around back into its bullish territory. Now remember, it has come back an awful lot. If you think we were up around that 120, and now we've come back to 66 around that area, and maybe just a little bit lower, but still under a lot of trading problems. And there's the hourly and also the daily. Let's have a look at gold. Gold has been a major concern because of that huge correction. We don't, sometimes you look at it and you think, well, how can that correction actually happen? When you've got such volatility out there. With interest rates moving up, gold is not that store of value. It actually costs to actually hold. And we've also got liquidation on margins. And that's why the price of gold has come under pressure. Okay, so that hopefully will abate. And I think given what we're looking at economically, down the track, that gold will recommence being a store of value. So what I'm seeing here at the moment, this is a clearing out move of all the previous longs. As you can see here, we're coming into good support. Expect it to stay around this area for some time. It's going to be quite volatile, there's no doubt about it. But as you can see, it is at some pretty major support. Resistance before now turns support, and that's where we're trading at the moment. So expect some volatility around here. Mind you, on the gold, keep your powder dry. We're no longer in positions. We're just sitting on the sideline and we're just waiting. Okay, that goes for gold and silver. Okay, let's have a look at the local equity market. Local equity market, obviously, as you'd expect, a little bit under pressure, come right off those highs. I think we have seen highs for some time now, up around that 9,180 or 200. I think that we're not going to be up there in any hurry. The RBA's moving to a tightening bias. That's only going to squeeze more profits. Our inability to stay above 84.20.30 will see the market continue to trade lower. The hourly chart, we might get a bit of a bounce, but I think if you can get that rally in, it'd be nice, so you can look at get in and actually do some selling. On the S&P, we remain short there, and that's just looked about ready to turn over. It doesn't look that confident at the moment. When you look at it, we do have good support here. We're right on that good support level here. Once again, resistance now turns support. If we get break through this area, break to that 64.50, then we can go a lot lower. And I think when I actually look at it, I think you can actually probably see it come back to this area. Here's the next level, 61.40. So we've got another 300 points to go on the downside. So I think equity prices remain relatively weak. When you look at the Nasdaq, same thing, just about to bust through some pretty significant support areas at around this level here, and 23,600, 700. It just doesn't look all that positive. 23,600, yeah. So I think that from that starts to trade lower. Well, that's about it from me for this week. I hope everyone has a happy week trading. Good luck. It's going to be volatile. Keep your powder dry for some good opportunities, and we'll talk to you soon. Bye for now.